for libertyandeconomics.com and the Liberty and Economics Review. I'm Nick Sorrentino. It's late. It's after midnight just turned after midnight, so it's the 26th. Just looked at CNBC, looking at the Hang Seng index in China, and it's down 1.86% or something, close to 2% for the session. We'll see how that ends up. But basically, the move is in reaction to the Chinese central bank saying that they're going to raise interest rates because the economy's running too hot, as we talked about a couple of days ago. China is too hot. I mean, they've got a crazy real estate situation going on right now. And bad things could happen there. I mean, people are talking about a bubble, and frankly, I mean, that's what I see. I mean, the stimulus that China basically flooded into their system when we started our stimulus, it looks like it just took a reasonably producing economy, even though it was contracting because imports or exports were being limited because essentially the United States was crashing. But it just overheated it, and now things are going to get real nasty. So we'll see how that goes. But the other thing I wanted to talk about was the fact that the bankers on Wall Street are not liking the increased scrutiny that they are getting. Essentially, the election by Mr. Brown in Massachusetts, basically put the Obama administration on notice that they're going to get hammered in 2010 if they continue to let Goldman Sachs and J.P. Morgan do whatever they want. Now, I mean, Obama's people, the people who run his administration are basically Goldman Sachs, J.P. Morgan, and so on. So we'll see, what kind of real action is taken, and probably, given that it'd be coming from Obama, it would probably be worse than what we have now. But regardless, what's interesting is that when TARP was originally passed, if you remember, and I remember it very well because I was a stockbroker at the time, the Federal Reserve and the federal government basically said, hey, look, we need, in the Treasury, I said, we need TARP, we need $700 billion. Well, the American people originally said no. They call people were calling their congressmen, and Congress voted against it. Next day, the market loses 777 points, which, by the way, that day, the bell on the New York Stock Exchange did not ring. And I remember talking to my wife that day, saying, it felt like a really sketchy morning to begin with, and then the bell didn't ring. It was just odd. But anyway, so it was interesting that the day after this, there was this, big plummet in the value of the stock exchange. And then what happened? Congress went back and they voted for TARP. Well, as time has gone on, a lot of people have come to the theory that basically Paulson took a gun to Congress's head and said, give us the money or we're going to crash the markets. It wasn't a matter of give us the money so we can avoid a crash in the markets. It was, look, we want to get bailed out, okay? And if you don't, we're going to make it very, very painful for you and your constituency. So give us the money. It's interesting. It's an interesting point of view, an interesting perspective, interesting theory, and one that I increasingly subscribe to. Now what's interesting is that apparently the banks are getting quite a bit more attention these days. Thanks largely to Scott Brown handing it to the Democrats. The Democrats saying, "Hey, we got to do something. We got to look like we're doing something," and they're not liking the increased scrutiny. And basically, what's interesting is that there are these sort of trial balloons being floated out in the financial press saying that, hey, the government could create a market downturn. Well, or a crash in the stock market. The word crash, I think, was used actually on CNBC.com here tonight. So basically, they're saying the same thing. Potentially, it's like, hey, stay out of our neighborhood, or we're gonna bring this whole thing down. So hey, pay attention. Let's see what happens. Uh, um, people who have seen my videos before know that I think this whole market rally is probably a farce. So, hey, be careful. Till next time.